Hello traders, this is a DAX recap for Thursday, February the 7th, and what a day it was today. What a day. Comparing to the yesterday, I mean you can't even compare that, because yesterday we had a snail fest and today that snail was transformed to the bungee jumper and we had a big drop on DAX. And in the morning notes, I have shown you here. Let's go for first thing is this big brother SPX. As we can observe here on this small chart that he was hanging below daily 200, and daily 200 is something that is widely used as a gauge of the trend strength, and it also can be used as a dynamic support or resistance level. And especially when market traveled this much to it, you could expect some level of profit taking and some level of pullback here. Beside that, bearish divergences were stacking up as a warning sign of the momentum slowing down. Bearish divergences on 240-minute chart. It is a 4-hour chart. So pullback should not be surprising. That was said in the morning notes that was published before the open. And at that time, which was more than 1 hour before the open, price was hanging inside, and when I made this screenshot, then it was already moving below the yesterday low zone. This was the snail territory from yesterday when they were basically all day inside these 45 points. From the regular trading hour open to the after hours to the 10 p.m. this is what we get for many hours. And as always, contracting leads to expansion. So for today, expectation was that we are going to get a better move. But you know, when you are expecting a better move, that doesn't mean that you will get a 300 points move. Like today, we got a 300 points move. That means you will have better move than that previous day, and probably expansion of the current ATR. That would mean that we could get like 150, 200 points, maybe more than 200 points. But we get this move. So okay, and I said this is important. If this zone breaks, we could go here to the main support zone for today very quickly. Why is that? Because the move that break this zone was also very quickly. You see, this here it was like zoom, and here you don't have any support. It is good. Whenever the market just swiftly goes to one area, if it's going to revisit the scene of the crime or a breakout area or whatever, it will go on the same speed or even faster if it's going down. And another very important thing here is regarding bias, because I said going below this small range breakout zone would put bears in control. Above these highs, bulls are in control. In between, bias is neutral, which means taking both longs and short setups on good location inside that neutral zone. And what we had today is change of the narrative and change of the bias when market went below this zone, as said in the morning notes, puts bears in control. So from here bears are in control, from here bulls are in control. This was that range, and now let's move this like this to emphasize bears control from here to the downside, bulls above, in between, neutral. That was said in the morning notes. And now, where were the opportunities for today? Because obviously you can't know in advance that the market is going to drop 300 points. If you knew that, you will just shorten the hold for 300 points. You will not trade multiple times this move. And there were plenty of opportunities today. So this first move started in the pre-market. And I mean, they made a move like that. It's really nothing to chase here. If there is going to be, a swift drop immediately after the open, you can catch a pullback later, or you could wait here with your resting order near the bottom of the zone in order to get a feel with your stop above the zone and to catch this move. This is how I did it, and I have showed a couple of my own trades. So this here, shorting a first pullback, because we were prepared for that. We were prepared for the possibility of the market making a full pullback, catching this first pullback, and now it is up to you, discretionary. Should you take 1.5 hour quickie trade, or maybe even 2 hour quick trades like this, or should you be more patient and fully expect the market to go and test this breakout zone for start? Because in this time here you still don't know what is going to be today. The market is prone to make a pullback, and we have bearish divergences and so on. So in this time, real-time information you have is this. And now market starts its way up. So if you put your stop to break even here, you will be stopped here. Then you could attempt again from here. But there are people that saw inverted head and shoulders here. But let me tell you something about those patterns. Head and shoulders, wedges, and so on. They're patterns that really don't have, in my opinion, bigger than 50-50 odds for a success, and especially on the lower time frames. You really should see one on a daily chart, on a weekly or monthly, bigger time frames. So this is nothing. And you could attempt again here. So this here, this was a quickie, like this. For me, it was a quickie. And then after that, when the market tested this area again, now you could observe, because you don't know, are they going to get back inside and to market to be again in more neutral bullish phase, or they are going to collapse from here? Because you don't know that. You could wait here, because this is first test, this is second test, this is third test. Market is trying to go above, and you don't know in advance are they going to make their way or not. But as soon as you see that it is not going there, you could go even for on 1 minute chart, draw yourself some lines to help you, and then jump in here with your stop above. So this could be your another, I'm sorry for this, this could be your another chance to short this market and close at the zone. But when you observe now, we are on the 5 minute chart. So basically, when I'm in the trade, I look to immediately put my stop and my target. And if your target is here, and you see this like boom, boom to the downside, you really shouldn't do nothing. You should just leave everything where it is, because it could bounce hard from this. But in this time, when this move ended, you got your order to close this field. You're out of the trade. Now you observe this. Now they are again going. They are not going above the zone. They are going below the zone. And we said in the pre-market note, below the zone is a bear territory. So here there is another chance. I took that trade also and show that to you. this was another chance for you to go short. If you were here for catching along, then that was at best break even, but most likely a loser here. But then you should really switch side as soon as you noticed that the zone isn't providing you any kind of bounce at all. First, when you see this, if you want to catch this, you will move your order below. If you think that this is a false breakdown and want to attempt along, then also near the bottom edge. So if you were long here, maybe it was enough time for you to save yourself and not to lose. But anyways, this was a failure here, and when you realize that it is failing, failed long signal is a sell signal. They are failing here. And if they are failing here, that means they're going down below into the bear territory. And this was that move. So again, you can use any of these zones for the exit. You could again take a quickie here, or you could let it go a bit more, and here was a better target. Here was a better target. I took a quickie, not this better one, unfortunately. But later I had more trades, so never mind. Here again you could attempt a long, but also when you observe that market went down 200 points and having trouble, really struggling like hell here to move to the upside, and you could draw yourself a fib like this, and now you're observing, you see where the 38.2 is. So they should make a 60-70 point move to the upside just for this retracement. But they're not doing that. They're struggling, and that is the time really to cut this trade, to take whatever, because that is a signal that they can move lower, that they can even test this larger time frame support zone. And after they moved lower and then again made a small pullback, this here was also another chance for us to short, and now we can expect fully for a test of the larger time frame support zone. Because if we went this far and we have a momentum, we have sustained momentum to the downside, looks like this. Very shallow pullbacks. Look how small those pullbacks were. Very, very shallow pullbacks. It was basically from here, from 11 o'clock, this price action turned to be a trend down day on DAX. And on trend down days you will get price action like this. Sure, you will get some mini reactions from the zone like this, or here there wasn't really a reaction at all, maybe just stopping a bit. Here there was first like a false breakdown, but not. It was all just a very small reaction and a failure, and they were just going woof to the downside. That is characteristic for the end of the move, and they're just going to test the best zone available currently, and this is it. And this here with this was attempts for us to go long on places that have bigger. Let me just I'm sorry, let me just close my okay. I'm sorry, I had this long from here, and I don't have a time to record video later, so I just closed that. And now you observe this. If you are going to look at that on the slightly higher time frame, like let's say half an hour, you can observe that Just bear with me here. Wrong line. Yes, this is it. Again, it's not it. I just put something else here. Sorry about that, people. Yeah, okay. See these bottoms? Now they're basically tested it to the point, just a few points below. So your resting order at 11k plus, let's say 11k and 5. Just 5 points above 11k with your stop here, slightly below the zone, could be good for this trade. And I have just closed that because I really don't like this. After 300 points move to the downside, they are again very, weak reaction like this. So you could even expect, I'm a bit jumpy today, but you could expect, after 300 points, you could tell yourself, okay, it would be logical really for them to make a move to this zone here. After 300 points to the downside, you could expect 100 points pullback. But it doesn't have to be like this. No, it can be like this, like another test, maybe even with a lower low, and then to make 100 point pullback. We shall see what will happen until 10 p.m. But today, really good day, amazing day. I wish every day could be like this, but of course you will see for yourself when summer comes. So this was this is how now the 4-hour chart looks like. If you draw a fib to this entire move, you see that the bottom of this zone and this number here could be familiar to you, 10,960, let's say, because that is our line in the sand zone. We have confluence there. Below 11k there is line in sand zone here. And on the daily chart, if you look at this structure, all of this move to the upside can be just a retracement of this move and basically a bear flag. Let's zoom it out a bit. As I said before, if you are a bear, you will make your case here. If you are a bull, you will make your case here. But day trader, really better not to be a bull or a bear. Better to just trade what he see and go zone to zone, or when you have a good plan and good idea that you can land a bigger target, then try to hold some of your trades. I made a mistake today not to hold some of my trades. I just took bit by bit, a couple of shorts here and one long as a final target, something on SPX also. And plenty of those trades make a really good day for today. And what about tomorrow? What about next days? If we observe, no, this is DAX again, just bear with me. Yes, this is S&P, SPX, and this is how it looks now. This is how it was in the morning. So what are the possibilities here? As I said, this was here, this is the FOMC day, FOMC day. For bulls, it's extremely important to hold above this range, not to let bear territory could be below 2,625. Below this here, let us use some other color, let's say red for this, and below this red line, no good for bulls, because they made a move above the daily 50, they tested it, they spent some time here, made the range, moved above. What is also usual about these moves to the upside that came from bottoms from the places where the market are really oversold, what is common for them? The common is that you will get one decent pullback, and that was it here. It is usually going to be 38.2, you see, like this, and after that you will have another big move to the upside, and then the fate of this move is going to be decided. So for this move here, if they manage to hold here above this line or inside this range and slowly start to grind higher, they could make higher high and go above daily 200 and above this high here. But if we see a decisive breakdown through this red level, then we could revisit these lows here, and that would mean very bad news for DAX, because DAX is much weaker than US market. And that is all for me for this video. It is a bit longer than usual because the day was really good, and I hope that you catch at least one or two of these trades, because even if you caught just one for the bigger target today, then this could be a really good day for you. I wish you good trading and good night.